Good morning, good morning, good morning. We're going to send out some invites real quick and then we'll get going. We got about 5 to 7 minutes before the market opens, so I'm going to review what I've got going on. And it's a red day, market's down. This was probably a bad week for me to try and teach people because it just looks like I'm losing. But that's okay. It's all right. Um, so we are live. This is my trading account, and let's just go through. It is a little bit like Groundhog Day because I do kind of the same things every day. But the reason I'm doing that is to help show my friends that want to know how I do it, and basically just show that this takes about 20 minutes a day. I do check it throughout the day, but in general, I'm going to defend, I'm going to run into different things and see what's going on and see how things work. So, if you're in here, if you have a question, feel free to throw your question into the chat. I do have that pulled up and I'm looking at it, but I'm going to just run through the positions. So first one we're looking at is ZB. So that's 30-year notes or 30-year bond futures. And I trade options on the 30-year bond futures. And right now we're trading at the 24-day out. I do want to trade today. I'm very likely going to trade a wide trade. In fact, we can do this pre-market and they're not horrible. So we're going to sell the 105 put, and you'll see that's $2,315 of buying power for $250 of potential profit. So just over 10% in 60 days, which is about 9 weeks. And then we're going to sell the 15 as well. That brings it up to about 20%. And we're going to set each one to close individually, or we could set them to close as a pair. In general, I like to set each one to close individually and take it at halfway. So we'll set this one to close at 7, and we'll set this one to close at 9. So that's the first trade of the day. This can be done pre-market because it's a futures market. So we're ending up spending $2,200 in buying power for a potential $500 in credit. We'll set it to close halfway, and the goal is to pick up 10% in 9 weeks. So that order is made. Let's see if it fills, and we'll move on to. Oh, and by the way, what you see here is that we're pushing that contract out to the Z contract. So if we go to trading, this is just a real quick understanding of futures. We're going to go to contracts, and it shows the active contract is ZBU, but what happens is it will roll out, and let's see if I can get a list on other contracts. Let me just pull up contract suffix futures. Suffix codes real quick and pull that in to explain it. And what you're going to see is that as you move out in months, each one has a different code. So we're now trading the December contract, even though the option expires in September, we're going to trade the December contract. The August contract is trading the September futures contract. I know, clear as mud. But that's the trade. It's working. Did I submit that? Oh yeah, right here. It's working. Let's take a look here. Let's just push this down one. There we go. Now we filled. So now that we filled that, we can look at what each one filled at. So this one traded at 17. This one traded at 14. So we're going to create a closing order at 7. And just remember, when you do this, this is 64ths of $1,000. So each tick is worth $15.62. But if you ever forget, it's just 1,000 divided by 64, right? So in this case, our goal is to make 7 times 15.62, $109 on that trade. We're going to set it to close at 7. Good till canceled. The next thing we're going to do is we're going to roll down and look at this one. It opened at 17. We're going to set it to close, what did I say, at 9. So again, our goal is to make 18 ticks on that. 8 ticks times 15.62, $124. And the overall expense ratio on this trade, like the buying power, was 24.32. All right, market's open. So buying power was 24.32. And what that means, when we look at the max loss, let me just close this. Your seller put at 105. It's going to show you a max loss of 104,000. That would be if it dropped down and you got assigned and then carried that until this went to 0. That would be the bond market collapsed with it by December and this went to 0. You could lose $100,000. The reality of that happening is not going to happen. So you can lose money on this trade just like everything else, but that is what that max profit is. All right, let's look at our next position. Next position is Amazon. Amazon is down, and I've got a August 21st put. Now it's 24 days out, but let's just go ahead and roll this out to the next month, right? We've got 3 weeks to deal with it, but instead of waiting, let's just deal with it now. So what we're going to do is I'm going to leave the call in place here, but I'm going to buy that to close. It's kind of a wide spread, don't love it, but we're going to buy it to close at 18.90, and we're going to roll it out hopefully to the September 18th. And let's see where we can go. So same price, September 18th. We're going to make $100, and we're just kicking the can down the road. So we're going to sell the 245 and 18. Let's just see if this fills. It did. We picked up $192 in credit. So we picked up $200 in potential profit, and we're kicking the can down the road another month and just letting it go. And that is using $4,800 of buying power. So we can make $2,000 because we're upside down in it, but we're going to pick up $200 in potential credit, and we're still locking up $4,870, and we added 4 more weeks to it. So we're making 1% a week on that trade. Next position, Google. We're holding 100 shares. It's down. I'm just waiting. Now you'll notice this red ITM in the money. I'll go get to that in a second. We've got a Robinhood put. Robinhood's down, but it's September 18th. We've got plenty of time. That was $876 of buying power. We sold it for $158. We're $100 upside down, but we're just going to let that go. That was yesterday's trade. I do have all these live. I leave them up. If you've got any questions about past trades, you can look at it. Like I said, this is probably a horrible week for me to show my trades because it's been a losing week, but it's a good chance to show how we defend on that. Let's see, QQQ up and down, going down. The red in the money is warning me that this closes today and I need to handle it. So let's take a look at that. This position is already in the money. This may rebound up 5 points and close to break even or to make me money. But the reality is, I don't want to sit there and watch it all day and stress. So currently we've got the order to close at 80 cents. We're going to cancel that. We're going to sell to close the 650. We're going to buy to close the 680. And we're going to go out 1 week to the 7th. And we're going to look at this and see if we can't. I'll start at 670. It was a $30 wide spread, so I'd like to keep the $30 wide. So let's go 670, 640. And that actually gives us a credit of $60-ish per contract. It's bouncing around a lot. So we are rolling 2 contracts out, and we're rolling them down in price. So we're rolling them back out of the money a week out. We do want the market to go back up. Who knows? But we're picking up, let's just lock this in at, let's just call it 50 cents each. I don't need to make much. I just need to get it to close. So it's going to make us $100 because that's 2 contracts. Roll it out a week. It filled. The spread was a little wide, but it's filled. So pick up another $100 in premium, give or take, minus fees, and we've rolled that out of the money and given us more time for the market to rebound. Now, we had that set to close at 80 cents. I'm going to go ahead and reset that to close if it gets to 80 cents. All right, what's next? So that is an explanation of how we roll down and out. This also is in the money. We will roll it down and out tomorrow, assuming the market doesn't rebound up quite a bit. I kind of am expecting the market to rebound up, but I'm usually wrong, so don't count on it. Silver, let's see. I've got a 50 put, expires on Friday. It's not being challenged yet. We're going to let that run. And I'm holding 100 shares. So, SpaceX, down, just killing me. But I'm making money on the calls. The shares are down. I'm making money on the covered calls. We'll let those run. They expire the 31st, and then I'll sell them again. Tesla, I got a put credit spread or a vertical. I don't do a lot of calendars, but I do a lot of verticals. And that one is, looks like Tesla's down again. Let's look at the chart. Kind of still the same. So Tesla's down. I've got one more trade I wanted to make. I wanted to go 38 days out, September 4th. And I'm just going to run this probably 2,000 wide. Let's see, 605. Sell the 605 put. Buy the 595 maybe. So that's 1,000 wide, risking $1,000 to pick up 100. So 10% on your money in 38 days. That reaches my targets. And then we'll set that to close at 50 cents. And And there you have it. That's all of my trades for the day. Let's go back and check that bond trade and see if it filled. Oh, it did fill. I forgot it filled. We set it to close. That's it, guys. In and out of the market in 10 minutes and nothing else expiring today. I'll have to manage that QQQ tomorrow. It's looking down. Actually, let's just look at that today and see. We'll manage that QQQ tomorrow. It's one contract, but we'll manage it tomorrow. If you've got any questions, as always, feel free to put in the chat. And if you like what you see, do me a favor, click the link to subscribe and click the like button.